Welcome to Tampa Home Talk with your host, native Tampa real estate girl, Katrina Madewell, a full-time, passionate, out-of-the-box thinker, love for home ownership kind of realtor with over 21 years of combined mortgage and real estate experience. Tune in every week at this time for expert advice on everything you need to know about home ownership, finance, maintaining great credit, building wealth, and making your everyday life better, and how you can be financially successful today and tomorrow. Remember, love where you live or let Katrina fix it. Now, here's your host of Tampa Home Talk, Katrina Madewell.
Good afternoon. Thank you so much for joining us this afternoon for Tampa Home Talk. You're listening to us on the Real Estate Radio Network. Very excited to bring to you a lovely panel today around commercial. In the past, we've talked about different types of claims and what happens if you have a catastrophic issue. And we've also talked about the different things with regards to residential. So our guests today are going to give you a little bit different spin on that because they are going to talk about the commercial side, how it all works, how to keep that process smooth, because as is probably residential real estate with commercial, that they're a little bit different animals. You got a lot more moving parts, things kind of move at a different pace, and just some different dynamics that go into that. So welcome this afternoon to Tampa Home Talk. Would you take just a second, introduce yourself, tell the person listening who you are, what your name is, where you're from, and how long you've been in the business. Michelle, you want to start first? Ladies first.
Michelle Clark with Blue Team Restoration. I've been in the business for 23 years, I believe.
And so how your company is Blue Team Restoration, but you also have a construction company,
yes,
right?
The construction company is BBMK Contracting.
Okay. Next, Rick.
Hi, I'm Rick Roman, Gulf Coast Underwriters. We are a full-service commercial insurance agency. I specialize in healthcare, hospitality, and defense contractors.
Gotcha.
Hi, this is Brian O'Connor. I'm an adjuster with a company called Engle Martin and Associates. I'm an independent adjuster, so we work for many different insurance companies that hire us. I've been in the business 25 years now.
Thank you so much for joining me. The beauty of this panel today is you guys have all had the opportunity to work together in the past and on numerous occasions. So that part's kind of neat because you have a good flow, like the ebb and flow of how the whole thing goes and how it ties together. So if you start out, can we start with an example of maybe something recent or something you had that's memorable, some type of a commercial loss, and then we'll talk about where to start, like where's a good place to start once that happens.
Well, I think so much of what we do is communication, and how we effectively communicate as both adjusters and underwriters and agents and also contractors. So I think a lot of it goes back to the basis of communication.
Right. Somebody used an example. I forget, was it a car dealership or something that it might have been somebody different I talked to. But like you have a commercial building, it's had a fire or something's happened that building and that business can't operate there at that point. So the very first step in the process, like where does a business go? What do they do at that point if something has impacted their business to the effect where, the three of you would be involved in a transaction with a business owner where it's affected their building, they can't operate business, and now they have to start. So what's the first thing they should know coming from that place?
Well, I usually get the phone call first. They usually call their agent, and an example we just had where Brian worked on for us. I got a phone call that one of our healthcare facilities has a surgery center, and overnight one of their pipes broke and flooded out the surgery center. So not only did they have surgery scheduled that entire day, that they had to reschedule, we needed a team in there immediately to remedy the situation. And Brian would be my next phone call. He represents the carrier, notify him of the incident, and get his team out there to start correcting the problem as soon as possible, get the client back on their feet.
So typically your client would call you first, Rick, because you're the agent, the insurance agent, to figure out, what's next?
Correct.
And then you, because of the severity of it with people scheduling, it's an immediate loss of substantial business, which would affect the insurance claim, right?
Absolutely. We need to get them out there as soon as possible.
And so that you would show up same day, next day? Like, how does that work in the commercial world?
Well, in the commercial world, we go as quickly as possible. But in this particular situation, we were contacted by the agent, but also the insurance carrier gave us the assignment. So our first step was to make communication with Rick, find out the appropriate people at the risk management department at this hospital, and Rick in turn placed us in contact with the contractor. Whereupon now we had all three parties available, with the insured also involved too, and we proceeded to get out there, take a look at the loss.
And Michelle, that's where you and your team would typically come in at that point?
Yes, exactly. We try to get there quickly.
How fast does stuff like that work in the commercial world? Because I know as far as like commercial real estate is concerned, it takes longer. Like it's a much longer process, but it sounds like that might not always be the case in your world.
Depending on what it is. Water, we move very, very quickly on. The quicker we get out there, the faster we can mitigate the damage and stop it from, getting worse and causing more problems. But on other things, like structural things, some of them require permitting, and it takes a little bit longer to get to work on it.
So, for example, in that scenario that you guys use that example where it was a surgery center and it had flooded, like how quickly do you get something like that resolved?
As soon as we get the call, our time limit is an hour. We try to get people out there within an hour.
So same day. And so how soon would a business like that be able to, would they be able to resume normal operations the next day?
No. Or it depends on the job, on the scope of the damage. Sometimes, if it's small, we can get things working right away. But if we have to put blowers and dehumidifiers and things down, we don't want mold problems. So those are going to have to run for a little while.
Well, plus in the example of a surgery center, that needs to be a sterile environment. So you have a lot of
much more complicated
other factors there, I'm sure.
And part of that is meeting with the insured and figuring out what their important issues were, how they need to address it, what their protocol is with getting the place clean, and how quickly they need to get the surgery center back up and running.
What are some of the things that you guys encounter? What are some of their biggest obstacles? Because I'm sure it's not something they encounter every day, as far as you're insured.
Well, for my insured, this particular case was the scheduling of the surgeries. Cause you have several physicians using the facility, and some surgeries are scheduled out 4 weeks in advance, and some are immediate because they need to address a certain issue right away.
So do they have the ability to use a remote location? Is that possible? To reschedule stuff? Do they do that?
This particular client had that ability. They have another surgery center 25 miles away that they were able to reschedule some of the folks that needed the immediate attention and get that done right away. But some don't, and some we need to get. And we were fortunate in this case. The incident was reported Friday morning. The team responded that morning, so they rescheduled all their Friday surgeries, and they were back up and running on Monday.
Wow. So that was really over the weekend.
Right. So the team worked on the weekend to repair it and get it open.
So I'm going to guess you guys made that look easy from your perspective, but it was probably a lot of moving parts, a lot of hours that were beyond just Friday, right? Your typical Monday through Friday.
It's a lot of moving parts with everybody involved, everybody from Rick to the contractor to the adjuster, and actually, more importantly, the insured was involved with every step of the process. So it's just involving everybody and communicating effectively.
Do they ever change what's there, from what they have going on right now? Do they change any of the layout or any of that type of stuff?
Oh, absolutely. You mean an improvement or a change or maybe an upgrade?
Maybe something they were going to do, but now that it's ruined, they're going to rebuild it.
Absolutely. Maybe in the example we just gave, it's a little bit different where it was critical, but let's just take a car dealership that wants to maybe upgrade a paint booth. So, there's a long lead time, and if you communicate with the insured and work with the contractor, they may decide to use that opportunity to maybe upgrade. But
gotcha. So we're going to take a real quick break here at Tampa Home Talk. We'll be back in just a moment. We're going to continue with some other, with our guests here and some different parts on the show. We're going to talk about the emergency contact sheet and a bunch of different things you need to know, and maybe even give you a little bit of a checklist as you encounter this process. We'll be back in just a minute. Go.
Hi, I'm Katrina Madewell, host of Tampa Home Talk, right here on 1250 Winds every Saturday at 4 p.m. Weekly, I'm going to give you market-appropriate, timely information regarding homeownership matters because we want to make your everyday life better. Wherever you are in life, it's our mission to bring you good advice so you can maintain good credit, live within your means, and build wealth. My team and I are passionate about it. Love where you live, or I'll fix it. Tampa Home Talk on 1250 Wins every Saturday at 4.
Hi, this is Melissa Rogers, owner of SEC Inspection Services. We're so glad that you're listening today, that we're offering you a special deal. If you're purchasing a home, you can have $50 off your full home inspection. And if you're already a client of ours, we're offering 10% off of any other service that we offer. Just give us a call at 727-786-4663 or visit us on the web at secinspection.com.
Welcome back. Thank you so much for rejoining us here on Tampa Home Talk. I'm your host, Katrina Madewell, and you're listening to us on the Real Estate Radio Network. You can catch us here every Thursday and Saturday at 5 p.m. Really excited to have our guests in studio today. We have Rick Roman with Gulf Coast Underwriters, Michelle Clark with Blue Team Restoration and BBMK Contracting, and we also have Brian O'Connor in from Engle Martin Adjusting. Did I miss anything at the end? Just adjusting. I got it. So you guys really went out of your way to prepare a nice little outline for today's show. So let's talk about some of the things, because I think Rick maybe put the top part of this together for sure. So let's talk about the top part of this and maybe where someone could take, and this probably really would even apply for residential, but obviously the topic of today's show is commercial. So with that being said, what's some steps that a business owner should take just so that in the event they have a flood or a fire or something like you guys deal with on a day-to-day basis, it will make the whole process easier for them?
Well, what I explain to my clients is that there's two costs to insurance when you're insuring your business. The cost for the premium, which is important. You got to make sure you get the best deal you can as far as price, but it's also the cost of an uncovered claim and how that's going to affect your business if you don't have the right insurance or you're underinsured. So you need to sit down with your agent, go over the policy, understand your coverages, and particularly older businesses with older buildings. Building ordinances have changed. Their current policy may not have language in it that covers any changes in the ordinances now.
That's a great one.
If they had a total loss, then their building might not be rebuilt the way they want it to, and they might have to come out of pocket several $100,000 that they weren't expecting to at the time. So sit down with your agent, make sure you understand what you have, take an inventory of your business, of the things that you need to operate, and also have a plan if you can't operate in your building, where you're going to go, and make sure that cost and expense is covered to do that so you can get up and go in and keep your customers.
So a temporary kind of place to operate your business while you're waiting for the business to be rebuilt.
That's correct.
It was interesting that you mentioned that sometimes with these older historic buildings, that when you get to that place, you're not up to code, which we know, right? Like, I mean, even on the residential side, after we had those back-to-back storms, we had numerous code changes in the preceding years of those storms. So in that example that you mentioned where someone would have a couple $100,000 difference, first of all, how does that happen? Because I think I know how that happens, but that's your area of expertise. And then how can someone avoid that from happening?
Well, they would avoid it by just reading their policy and making sure that it covers ordinance of law changes. And we're starting to see that now in a lot of commercial condominium policies that we write.
They're including those?
Well, the actual Fannie Mae is making that a requirement now, that the condominium association have the coverage, because a lot of them, probably 80% of them, don't. And we're having to go back in and add it on the properties that don't have it, because they won't close loans or do refis without the coverage on there.
You're talking about the master policy, right, for the whole community?
Absolutely. And Brian would probably get you an explanation on how that would be handled at a time of a loss.
And there's been significant changes related to code really since Hurricane Andrew.
Right.
So it's not atypical to run into a loss where there's code related to buildings in terms of wind load for the roofs, sprinkler requirements, even fire requirements for drywall, alarm systems, burglar protection. So it could very quickly become very, very expensive.
Well, it's interesting because you have this building, and it's okay for the time that I guess you purchased it and got insurance on it. But then I imagine time changes, right? People stay in the same place for a while. There's these code changes, and then if they're not looking at their policies, at least annually? So, and that's the thing. Like for somebody like me, I could look at a real estate contract and know that thing inside out. Whereas I look at an insurance policy and a deck page and can understand the basics of it. When you start deep diving into the rest of it, it's green, I think, to a lot of people.
Yeah, I certainly think, it may be different for each type of building where it's located. A building that was built 2 years ago is obviously going to have maybe less stringent codes that it may have to adhere to versus a building that may have been purchased or built in 1952.
So do you do annual reviews for your clients every year just to kind of go over the policy? And does the insurance company ever make changes to those?
They absolutely do. We do annual reviews with all of our clients when it's possible for them to meet with us. We had a renewal come in last year, and it expired with sinkhole coverage, and the carrier renewed it without sinkhole coverage. When we were reading the policy conditions and the forms on the back, I noticed it, called the underwriter up and said, hey, it doesn't have sinkhole coverage on it anymore. And their response was, it was an oversight, we'll add it back on, and there was no additional premium. So it's important for the insureds to sit down with their agents, read their policies, even at renewal, because things change every year. They add different conditions on, different forms on, and they take stuff away. So it
seems like they're removing sinkhole coverage from everything. You're seeing that on the commercial side too?
Absolutely. And you can get it added back in for a premium if the insurance company will allow you to do that.
I know that in our experience, and I don't sell any commercial, only residential, but from what I see, almost everything doesn't have sinkhole coverage. It has catastrophic ground collapse, but it doesn't have sinkhole coverage. And if you try to add it back in, if you can even get it, because we're seeing a lot of the insurance companies don't even want to include it, but if you can get it, it seems to be equal to or close to what the rest of the premium is. Is that what you're seeing on commercial too?
Not necessarily. It's usually been around a 10% increase in premium if we can get it. And they're going to do their mapping of the area where the building's located, see how many claims have come in, and then they'll decide whether or not they're going to offer it at that point.
It seems so off balance, but I know there was a lot of people that, made claims probably that shouldn't have, that it has affected everybody now, where it used to be just included in your insurance policy, now not so much anymore. So let's talk about your emergency contact sheet, right? You have your information, Rick, if you're the agent or whomever the person listening, their agent is, and then they should have some other stuff in that list also, right?
Yes, certainly. Probably you want to try to have the insured document the loss or document the location prior to the loss that occurs, and that can be done with photographs. It can be done with an inventory taken.
How does that work from the adjuster side? Like, if someone goes in there and let's say they did a video of the entire inside of their business, or they had photos, especially if that's timestamped, like on some place like YouTube, does that have a lot of weight for you as an adjuster when you go back?
Absolutely. And let's give an example of a bad fire. It's very easy to go back with previous documentation and photographs to reassemble it, because oftentimes if the fire is severe enough, it may not be too much to look at. And if the insured unfortunately may have had his records burned up or his fixed asset list burned up, you may have to rely on other sources to try to recreate the insured's business.
I can imagine, because at our office, even though it's not huge, and even at home, to try to remember everything that you have in there, there's no way.
I don't think you ever can.
No. So I can imagine where a video and photos and that type of stuff and a detailed list of those items that are expensive would help. I know that for us, we started sending all of our receipts off a while back to a company called Shoeboxed. So they send in this magic blue envelope every month, and we literally put the receipts in there, ship it off. They scan them and store them electronically in the cloud, where we never have to see them or get them back or file them again, which is awesome for us. And we have access to them like right away on our smartphone if we need them. So that's the fun part about that. But so you use that, electronic receipts are acceptable at this day and age.
Absolutely.
And so do you guys deal with like replacement? Is that ever an issue, like on the commercial side? Like, because I know for residential, we usually encourage our clients to get replacement costs so that, if they have a big screen TV on the wall and their house burns down, it's not depreciated so much that they can't actually go buy the same TV or something comparable to what they have. Is that the same? commercial?
Typically, yes. There's a replacement cost endorsement that the insured has. The basic policy may be an actual cash value policy where you depreciate the component, but many of the policies will have a replacement cost endorsement, which allows the insured, subject to the terms of the policy, to recover the replacement cost of that asset.
So what's important about having the contractor and the adjuster work together? Michelle,
it's really important that we have good communication. If the contractor and the adjuster can go out together and look at the loss, and we can agree on what the loss entails. In other words, the type of flooring, the type of cabinetry. Sometimes the contractor will go out and look and notice things, or the adjuster will go out and notice and look at things, and they don't come up with the same figures or the same losses that they see.
Why do you think that happens a lot of the time? Like, where's that missing gap?
Sometimes it's just a matter of maybe, talking to the people, getting them to tell you, what grade everything is, or, sometimes it's just the person that goes out. But if we can go out together and we can agree on what, the loss entails, then we're going to come up with the same numbers. I mean, we pretty much use the same system to come up with those numbers. So if we can go out there together and come up with an agreed upon scope, it moves the claim much faster. Everything goes much smoother. You don't have to go
How
back
often
and forth.
does that happen, the two of you actually get in the same room and kind of compare notes and agree on that?
Really often. I mean, that's your ideal situation, is to get everybody out there together. It's not always possible. Sometimes people are in different directions, going different ways. But if you can do it, it's always beneficial. Wouldn't you agree, Brian?
Yeah, and really, ideally, 3 people. The insured is the most important part of this whole process on there, because we're there to indemnify them, pay them under the policy, and you as a contractor are there to give them a good quality job.
What are some of the biggest challenges that you see in working with some of the owners to rebuild what they had, whatever the loss was?
Really just going through and making sure that they understand what it entails for us to do our job, that we're going to have certain procedures in place. We're going to have to handle things in a certain manner. We're going to need a certain amount of equipment. I mean, and that's, again, going back to communication. I mean, making sure that they understand what the process is, how long it's going to take, what's going to be needed to do it. Sometimes they're going to have to be moved. I think a lot of the time, if you talk to the people, if you just have the conversation back and forth, the owner, the adjuster, the contractor, and everybody knows exactly how it's going to go down, you lose a lot of the problems.
So is it any one, who usually takes the responsibility, or whose job is that to explain the process from A to Z to the insured? Is that you, Rick, or somebody else? Or do you all play a little part in that?
I think we all take stages in it. We all start off and explain to them what's going to happen, with Brian coming in, and then Michelle next, or the contractor next, and then pretty much Brian will take it from there, and Michelle will take it from there on her end.
And you guys finish it. Does that affect anything with the new insurance policy going forward? After it's all done, you know how a lot of times in residential, say if you have a claim, your insurance is going to go up. Same for commercial, or not always?
It depends on the frequency of the claims. If we have one claim come in that was just an out-of-the-blue situation, it really probably will not affect the rates. But if we see a frequency come in over and over again, and it's probably going to have a negative effect on the markets that we can approach, and then the pricing of those markets at the same time.
Gotcha.
So, yes.
So we're going to take a really quick break, and we'll be back in just a minute on Tampa Home Talk. When we come back, we're going to talk about some of the post-loss things that the insureds and the business owners can get into and expect. And we'll also share some fun stories that you guys encounter being in the business for as long as you have. We'll be back in just a minute.
Aaron Davis here, owner of Hillsborough Title, serving all of Tampa Bay. Our service, strength, and knowledge make us different. From Polk County to the Gulf, Pasco to Manatee, Tampa Bay, we've got you covered. Visit us on the web at thebesttitle.com. That's thebesttitle.com.
Hi, I'm Ike Antonio Thomas, Director of Salitas House, where we offer homeownership workshops, pre-purchase counseling, foreclosure intervention counseling for homeowners at risk of losing their home, financial coaching for adults and teens. Come sign up for our program where if you save $1,000, we'll give you $1,000. Call us 813 813-425-4847. Again, 813-425-4847. You can like us on Facebook or you can find us on the web, SalidasHouse.com.
Welcome back, and you're listening to Tampa Home Talk. This is your host, Katrina Madewell, on the Real Estate Radio Network. You can catch us here every Thursday and Saturday at 5 p.m. Our topic for today's show is commercial. We're talking about a commercial insurance, construction, loss, how all that works, how it plays a part in if you have to file a claim and what happens next. We have some great guests with you today. If you missed any part of today's show, please catch the show in its entirety. We'll post it on our website at tampahometalk.com. We also have all of our shows available via a podcast, and we are across the web on Facebook and Twitter at Tampa Home Talk. So thank you very much for rejoining us for today's show. Rick Roman with Gulf Coast Underwriters, Michelle Clark, Blue Team Restoration, and Brian O'Connor with Engle Martin Adjusting. So we're having a fun conversation over the break, and we're going to get into the rest of our show. But we were talking about replacement in the last segment and how that is from the residential side, and then you were explaining how different it is on the commercial side. I wish I had chimed in, but we're gonna pick up where we left off. So what does that mean exactly? Like, what does co-insurance mean, and how can a business owner be prepared to deal with what we talked about over the break? You want to explain?
Well, as we mentioned earlier, you need to sit down with your agent and make sure that the values and the coverages that you have are correct. With commercial insurance, there's a penalty clause called co-insurance. And if you had a total loss, and for instance, if you said your building was worth $1 million, and in reality it was worth $1.8 million to replace that building, we insured it for $1 million, and there was a 20% co-insurance clause in the language of the contract. Since we're underinsuring the building,
so just break that down a little bit further. Like, what exactly does that mean? 20% co-insurance clause. I don't understand that.
Okay, the 20% co-insurance clause means that the insurance company is giving you a 20% window to be wrong with the valuation of the building.
Gotcha.
You need to be within. Yeah.
That's your buffer. Is that what you're saying?
It's sort of a buffer, right, Brian?
It is. It allows the insured to report some lower values, provided he's within a certain range to the replacement cost. It's a sharing of the loss if the values are not reported.
Gotcha. Because obviously you're insuring a certain amount. If that value is higher, it comes with a slightly higher premium.
Right. And really, at the end of the day, to avoid that, make sure you work with your agent, work with the insured to get proper values reported to the insurance company.
So continue where you were going with that, Rick.
So if we had a total loss, the building burned down to the ground, we had a hurricane, knocked it down, and we were insuring that $1.8 million building for $1 million, the insurance company is not going to replace that building in that case. They're gonna
like at all.
How would you handle that, Brian, in that case?
Well, I guess in your example, they may very well just pay the $1 million, and the poor insured may have a building that's worth $1.8 million.
So what about my buffer? What about my 20% co-insurance? I'm just curious.
It just reinstates or reemphasizes the fact that you need to sit down, because so many people, they'll get their insurance renewal in the mail, they'll pay it year after year after year and not think about, okay, what am I insuring here? What are the values of this building I'm insuring? How have materials changed, building ordinances, the cost of these goods, labor, everything, and sit down and come down with a true value. If I lost everything, what's it going to cost to rebuild it? So co-insurance won't come up at all. And another way to eliminate it as well is get an agreed value from the insurance company when you're going in. What you're saying is,
so when the policy is being written,
when you write the policy with your agent, make sure you have the best way to eliminate this co-insurance penalty is to have an agreed value. The insurance company and you are agreeing on the value. If there's a total loss, they're going to replace the building 100%.
Gotcha.
And there are different ways that you could assess the value of the building. The insured may get an appraiser out there to take a look at the building, the replacement cost of the building. They may get a contractor to do the same thing.
So how often should somebody do that? Like you say, I think a lot of people, you get your renewal, you pay it, you renew it, you don't think about it. You don't think there's even any changes in there. You don't think about appreciation and value. and what happens if you do have a claim, right? It's just one of those things you don't think about unless you're in that place where you've had a loss. So that's the purpose of today's show, is to, think about those things in advance and analyze what you can do to make that better if, God forbid, you have to experience it.
Yeah, I would think certainly at least once a year you should be going back and looking at what the values are, and as a commercial business, maybe look at what your fixed asset list is. Fixed asset list is going to pick up the larger assets, but oftentimes there are other smaller assets such as a desk or a table or chairs, that don't necessarily hit a fixed asset list. So I think the insured should be going through, looking at the values at least once a year and maybe updating it. So, there's not only the building values, but there's the contents values of the building. And there's also the, let's say it's a restaurant, there's also the business income or the time element aspect of it. So
let's imagine that I'm renewing the policy on my building. It's not something I'm thinking about. Are you calling me every year for an annual review, or what should I be asking you, Rick, if you're my agent and I'm calling you because you didn't call me for an annual review? What kind of stuff should I ask you? Like, where do I start?
Well,
I just want to pay my premium and renew it. I'm not thinking about that.
Right. Most business owners are so busy running their business that they really don't want to take the time to do it. We will contact them 90 days out, ask them what has changed. Have you purchased any new equipment? Have you purchased any new locations? We've had situations where one of our insured bought a new building and forgot to tell us all about it until 6 months after their renewal. And then we find out, we have a new location. We need to add it to the policy. So 90 days out, normally we will contact the insured, find out what's changed, any new equipment, any renovations, any additions, and then we'll also take a look at the age of the building. If the building's 2 or 3 years old, it may not be that big of a concern, but a building 25 years old, really need to look at the ordinance changes, cost of construction, everything else to make sure we have the right value of coverage on that building.
How does somebody accidentally buy another building and not have insurance? Was that a cash deal?
It's one of those situations where he's running a business, he's probably understaffed by 4 or 5 people and just forgot about it.
Gotcha.
It happens.
Well, it's good that you're making those annual review calls so that you can check with them on that type of stuff. So, Michelle, you had just some fabulous little points over the break that you were chatting about. Like, oh, wait, pause. Yeah, let's share that. Do you want to chime in where you left off?
Yeah, it's preparation and for the event of a loss. What our company does is it's a service we provide to some of our clients, actually to all of our clients, but only some of them take us up on it, where we go out, and it's called a blue line agreement. We go out and we map out the whole entire building. We take pictures of the perimeter of the property. We go up on the roof. We take pictures of the roof and the air conditioning systems, all their operating systems. We sit down and talk to them about where everything is, where their important documents are being held, everything that we need to know about the property. We get floor plans.
You were mentioning, too, about where people enter and exit the building.
Right.
And I thought that was interesting. I'm trying to wrap my brain around that.
What we do is we map out a loss. If there is a loss in this building, how are we going to keep you from having more of a loss of business? So we want to know where you want us to park, so we're not obstructing any of your parking. We want to know what doors you want us to go in and out of, so that there's still open room for your customers to come in and out of, especially in like a hotel or a hospital. We want to be as unobtrusive as possible.
Well, I'm picturing the example that Rick gave earlier in the show, right? It's a surgery center. You don't want contractors walking through with drywall in the front entrance where the customers are coming in. They're going, whoa, I'm having surgery here.
Right. So we don't want to go in the back door. We want to make sure that nobody knows we're there. And in one case, a good example is we were in a hotel. There's a huge loss in a hotel down in Aventura. I had, some adjusters that have been spending the time out there, and I told them that we were working on the hotel, and they said, we didn't even know you were there. And I said, that's best case scenario. If we're not out there and you can't see us and we're not interrupting your business,
but you're doing your job.
Then we're doing our job, We're keeping you from incurring any more loss. So we try to go in, get the job done as quickly and as efficiently as possible. And if you give us that avenue where we can go in and map out that loss before it occurs, then all you have to do is call us when the loss does occur, and we're just on it. We know exactly what we're going to do, how we're going to handle it. We've got the file ready for you. So when your adjuster comes out, you can show it to them and say, hey, here's how the building was before it happened.
So you guys are having a catastrophic plan in place?
Not just catastrophic. I mean, that can help in, even in a flood loss. If we look at the floor plan and we know where, what caused it, what caused the water damage. And we've already looked at it. We've got pictures of it. We know exactly what areas to attack. It just speeds things up quite a bit.
What are some of the major things you guys are working on? I know we mentioned water, we mentioned fire.
Mold. So
mold's another one. What are some of the other things you guys see a lot here? Like, what do you deal with day in, day out?
There's wind damage. There's, in the case of a claim that I handled with Rick was, you'd be surprised how often people drive their cars into buildings. It's very common.
I was listening to you talk about that over the break, and not to name any names, but we were there actually at that place, and my son was getting his foot x-rayed, I think, or his arm. I don't even remember. I have 3 kids. They all blend together. But I remember the building was different. Like, it had changed. I'm like, this is not, like, we were here before and it didn't look like this. And they said, oh, yeah, somebody drove their car through the building.
It happens all the time.
You would think that would be in the code, because I know, like, for residential, they made that code a while back with the hot water heater being in the garage. They made you put either like a pole or a stopper in the front so that you couldn't drive into the hot water heater. Exactly. So you would think if it happens all the time, people are driving into buildings, there would be some type of a perimeter barrier or something to keep that from happening.
And you have to remember, in Florida, we have a large elderly population. So when people start having problems with their eyes, or, they can get flustered or whatever, those kind of accidents happen.
Are you seeing a lot of this? Have you dealt with a lot of those claims too, or?
We do get some. Typically in the winter months, we get quite a few of them.
In the winter months.
Out-of-state plates.
So what other stuff do you guys see though? Like, is it all the same standard, like mold, water, fire, driving through buildings?
Well, you get a little bit of everything. That's the enjoyable part of the business.
Okay, so what's one of the wildest ones you've had this year?
Well, I don't know about this year, but I've been out with hurricanes and riots and hailstorms and just about everything. So,
like, literally in those places where people are in survival mode because nothing's open and they're looking for water and basic stuff.
And those are always big challenges, particularly down in Florida with our hurricane exposure here. Kind of unique with Michelle's firm has done quite a bit of that, and a lot of it is just logistics. How do you handle something post-loss?
Gotcha.
Getting people to the site, putting some of your vendors and contractors in hotels, finding gas.
So you put on your sheet here, we were talking about post-loss, additional living expenses, time element. You want to break some of those down?
Additional living expenses would be more on a residential claim. Mm-hmm. If the person has to be moved to a hotel, or if they have to rent a house or whatever, that ALE will kick in and cover that expense.
Does that apply for businesses too?
There's a different type of coverage. They have something similar.
What's that called in the business world? Like, where they have to, we talked about them being displaced and having to work at a different place or a temporary place.
For most companies, it's called business income, or for actual loss sustained, or additional expenses for operating expenses and so forth. And it's a separate coverage that they need, another one that they need to review.
So they either don't operate, and you guys pay for that time period that they don't operate, or you pay for them to actually relocate to a different place to operate?
Well, it really depends on there. And Michelle's early example about the hotel, if you look back, most losses are not total losses. Most losses are partial losses, where you may get a broken sprinkler pipe on the 9th floor of a hotel, and there's only portions of these rooms that are out of business. And, how does a contractor and the adjuster and the insured effectively work together to keep the hotel running, to make it seamless so that you don't identify the contractors doing the work?
You don't notice stuff is going on. There was a hotel that I stayed in recently, and the shower, when I tried to get out, it didn't turn off. And I felt so bad. And, we're so green. We try not to waste stuff. We recycle everything. And here I'm getting out of the shower. I'm getting ready to go to this business meeting. The shower just will not turn off. So I called down. I'm like, okay, I'm getting dressed real quick. Your shower is not turning off. And they messed with it for a while. And I had to go, and the shower was still running for a while. So it was interesting. So it's probably, imagine little things like that if eventually it just keeps running, it may create water intrusion in another room or something like that.
Notify Rick.
Time element, what does that mean in your world? like how long it's going to take from beginning to end? Is that explaining it? Is it caring for that? What did you guys mean when you put time element?
Yeah, basically in a nutshell, it addresses, in Michelle's earlier hotel example, there may be some rooms that are out of service. And think about the high point in summer. The hotel may have a number of displaced residents, and there's an income stream that needs to be protected. So the insurance carrier will look at the insured's books and records and evaluate what the sales would have been had no loss occurred. So it's important to meet with the insured, get some of the financial information so that you can properly measure a loss in sales as a result of a covered loss.
No, you had on here interior drying, so that's for a flood, I would imagine, right?
Yes.
And does that happen sort of the same way in the residential world it happens as far as?
Similar, but our equipment is a little bit different. We use what they call desiccant dehumidifiers, that it dries a much larger area a lot faster versus, the kind of ones that you pull in behind you.
What is that called again?
A desiccant dehumidifier.
That's interesting. I know you guys have different terms, of course, in your world than we do in ours.
We do. It's like another language.
Yeah. And you were talking about the property damage, soft goods, dry goods, to dry clean or not to dry clean. That's an interesting one because I know that it was interesting because I've had a bunch of you guys on because it's summertime, right? And we see all these different things. And right after I had a show, one of my best friends had a house fire. She was out of town. She actually took her computer she would use for work, because she had to work while she was away. Whole house, like the dishwasher caught on fire and the whole house just filled with smoke. So the fire actually put itself out, but everything in the house smelled like smoke, like everything, her clothes, everything. So I was looking at this on your list, and I never really did get a clear answer on that. And it was just interesting that you put on here to dry clean or not, because we're saying some stuff can be cleaned, some stuff can't. Can you get that smoke, soot, fire smell out of anything?
It depends. I mean, you're better off going to a dry cleaning company to handle most of that smoke, because there's a different process in handling it. But if things aren't of any value, you don't want to spend a lot of money dry cleaning all of them. If it's better to replace them, replace them. If, you're talking about children's clothes that they're quickly going to outgrow, go ahead and replace that stuff instead of paying, because the dry cleaning is expensive for that type of a loss.
And you guys, I mean, I'm sure there's cap limits like with anything else. So you have to make sense on what you're doing and that type of stuff. All right, so we're going to take a very quick break here on Tampa Home Talk. You can reach us on our website at tampahometalk.com, also across the web on Facebook and Twitter at Tampa Home Talk, and our off-air number, which I have not given out yet, 813-377-2775. We can connect you with any of our guests that we have on our show today, or otherwise, 813-377-2775. You can call us or text us on that number. We'll be back in just a minute. When we come back, I'm going to encourage my guests to share some of the fun stories and experiences that they've had, and we're going to make our last segment fun. We'll be back in just a minute. So, welcome back. We are going to finish up the last part of today's show with Paula Blanda, the insurance lady.
Hey.
West Coast Insurance. Thank you. Welcome back.
Thanks. Great to be here.
No stranger to the show. Ted Coppola? Coppola. Thank you. Nice Italian name. Can't mess it up there. You handle a lot of the adjusting side, and it was just interesting. We were talking with some of our other guests that we had, and some of the insurance claims that I see, it's like, wow, it blows my mind.
Crazy.
Like the stuff I hear from you guys, I can't even believe people make an insurance claim on that. But you were sharing that, and this is interesting because I have a high schooler, a middle schooler, and an elementary schooler. So, it's interesting when we go for the new orientation, right, for the new students for high school, middle school, even the middle school. Not only are they encouraging students to the use of iPads, smartphones, that type of stuff, and technology, but they also were sharing, and I'm pretty tech savvy, so I follow a lot of this stuff, but they were sharing a lot of these different sites that the teenagers are on. Okay, it's not just Facebook and Twitter anymore, right? It's Instagram, it's Snapchat, and
everything.
It's explaining what all those are. But you had one recently, or just like a generic story, or was something that went in the news.
Oh, yes. And we think this might even get a little bit bigger and bigger here nationwide.
Oh, it will. I think it will.
I think so too. Most folks may not realize on their typical homeowner policy, they have liability coverage. So you have liability built into your coverage. Usually it's at $100,000 or $300,000 limit. Well, we had a family that had middle schoolers in the house, and the kids were on the Facebook, and they were talking pretty bad about one of their teachers at the middle school, and this had gone on for quite some time. Got into litigation, and it ended up
So the teacher, right, I'm sure started the litigation.
The teacher started the litigation against the family and the child, who was a minor in middle school living in the household, talking bad for a long time, and it ended up through the court of law that the homeowner's insurance paid that teacher a $300,000 liability payment for the liability of that child on Facebook.
That it blows my mind. Tell me what's in the insurance policy that somebody like me, because I don't do insurance, I'm so green to this, right? I stick with the real estate stuff. Explain to me what's in that's even covered. Like, how did that happen? Because you're thinking liability, trip and fall, right?
Exactly. Well, with the homeowner policies, and they were talking about that earlier with their business insurance, there is a built-in liability, and it can cover many facets. I'll give you another example of a client of ours. He's out golfing on the golf course Saturday morning, hits the golfer in front of him with the golf ball. So that golfer that got hit is screaming, "I'm going to sue you. You cracked my head open." And that was getting ready to go to a litigation. And if so, he would have had a liability to help him. It's not only liability for your home and your property, it gives you a personal liability for an event like that.
Wow.
A lot of folks don't realize. So we encourage y'all, look at your homeowner policy and see what liability you have in there, because of course it's getting more and more in the forefront, especially in Florida.
Now, I know that we're having some people listen live, and there was someone that actually had a question for you, and we lost her. So if you're listening now, we do have Paula, the insurance lady, in studio, and she's ready to answer your question. So you can call us back. The studio call-in line is 727-441-3000. Again, was her name Cynthia, Eric? I forget.
I think Candace.
Candace, thank you. It's Candace. If you're listening, we are ready to take your call. 727-441-3000. Please call us back, and Paul, the insurance lady, will answer it. So, Ted, chime in. You see the whole different spectrum, right, with the adjuster side.
Yeah, the analogy that we used to always say about the insurance business is that the insurance business is a cow, and the agents are the mouth. They take in the green stuff and feed it to the stomach, who's the insurance company, and the claims adjusters are the tail. Because all we do.
Are you sure it's the tail or the stuff that comes out behind the tail?
I try to clean it up somewhat because we're the guys that are spending the insurance company's money. And so, yeah, we see a lot of claims that you wonder sometimes what they're thinking when they turn them in, but you adjust them the way they are.
How many years in the industry did you have?
37.
You told me. I knew it was like forever ago.
Yeah. Yes.
So what's your wildest, quirkiest, craziest story?
I mentioned to Paula earlier, she asked me how long. I said, well, the first claim I ever handled was when Moses dropped the third tablet.
Crazy claim.
Yeah. I don't know. You have over 37 years. You have so many claims. Not so much crazy. Some are sad.
But like, what's the wackiest thing? Like off the wall. We're talking about lightning strikes. In another part of the show. But like just wacky stuff that you don't think about or see or hear every day.
I had a claim years ago, mobile home claim, where the wife was upset a little bit with her husband, so she chucked a 2x4 at him and struck the window instead of striking her husband. And, of course, she turned that in, and the company had to pay for it because even though she meant to hit her husband, she didn't. It's still covered under her insurance policy.
You mean insurance is covering that? We had Glass Doctor at our house to fix that stuff.
So you're breaking windows out there?
Well, it's not my bad temper. It's my better half. So what are some of the frequently asked questions that you get?
Mostly when we go on to the claim, the first thing people are asking is, when am I getting a check? Which is a very difficult question to answer because I don't have any control over that as the adjuster going out in the field. My position is I work with the adjusters at the insurance company and they issue the checks. So unfortunately I always have to tell them that you have to wait and see. We try to do it as quickly as possible. There are hoops that we got to jump through. There are certain things we have to do to make sure the claim is valid. And once that's done, then contrary to what some of our attorneys out there would like for the public to believe, insurance companies do what they can to try to get the claims paid as quickly as possible.
Well, the earlier guests on today's show, they were talking about how, it's really good when the adjuster and the insurance agent can work together to try to, and even the contractor for that matter, just to try to be on the same page. So I think we had our caller back, Paula, and she had a quick question for you, and I don't want to run out of time.
Lori Zoo.
Oh, it's Lori Zook. Lori, thank you. She had her calling in to do our credit crunch.
How are you?
Good. How are you doing?
I'm doing good. You want some credit tips today?
Yes. Lori, you can catch her show. She'll be on Half Empty, Half Full tonight at 11.
Thanks, Katrina. Well, I wanted to talk a little bit about credit cards because a lot of people don't know how to, manipulate their FICO scores or do it the right way. Obviously, making a late payment on a credit card can crash your scores. So you don't want to be late at all. And a simple way to solve that is to just make a payment every other week, and then you'll never have a 30-day late payment. The other thing that you should do if you're going to purchase a home is you actually don't want to completely pay down your credit card. You want to leave a small balance, but stay at less than 25% of the credit limit on those cards. But just leave a small balance if you can, even if it's a tank of gas once or twice a month. The other thing that people often do is
Hey, Lori, you might want to chime in on that because when people pay it off entirely, then it doesn't show any use of credit, and that's why it drops the score, right?
That's correct, because you're not utilizing any credit at all. So the FICO scoring model is looking to see what is your utilization ratio, what percentage are you utilizing. So that's absolutely correct. But a big mistake people often make is they close credit cards. And that's something you really don't want to do. Really, all you need are 2 to 3 positively reporting credit cards. The longer the length of history is on those credit cards, the better. But sometimes people have a lot of credit cards and they want to go for a mortgage. Well, what they should actually do is keep 2 or 3 of those credit cards with some small balance, and the rest, the smaller credit cards, you don't really have to keep much on those. But don't close, because if you close your credit cards, it's going to be a score hit.
Lori, I have a quick question for you. It's Paula, the insurance lady here. How do you handle it when a consumer has gotten hit by identity theft and fraud? And I ask because on many homeowner policies, there is identity theft and identity fraud coverage that can help them.
Right. Well, what most people don't realize is that if they are a victim of identity theft, that's really pretty simple to solve. On the FTC, or Federal Trade Commission, FTC.gov website, there is an identity theft affidavit that they can fill out themselves.
Okay.
They will need to go to the police department with a copy of their credit reports, with all the information circled that does not belong to them, and they need to get a police report number, not necessarily the report, which can take weeks or months, but they need that report number, which is given that day, and they put that report number onto the ID theft affidavit, and then they need to send 2 copies of identification with the ID theft affidavit notarized, which usually your own bank will do for no charge.
Or we can do that at our office. We're always happy to do that.
Me too.
Yep, and then they send that into each of the credit bureaus. What I typically tell clients is on the outside of the envelope, write "Attention Fraud Department," so it will get there faster than someone just sorting the mail, in the regular building, for example. And typically within 30 days, it will be blocked off their report, usually less time than that.
Great to hear. And just as a reminder to folks, if you have been a victim of identity theft, please look at your insurance and your insurance policy and see if you may have some coverage to help you with that.
Lori, is that really coming off that fast?
Yeah, it comes off that fast. But I want to bring up one other point, though, because even though I deal in consumer credit, if they are truly a victim of identity theft, especially if they believe that not only has their personal, their name, their address, their date of birth, and their Social Security, if your purse was stolen, if somehow you believe that somebody has access to your information, you also need to go to your bank, which is cash, and actually close out those accounts. A lot of times the bank will just say, well, we'll give you a new password. Unfortunately, that's not good enough. So you actually need to go to the bank and change your account numbers.
it's kind of like a clean swipe right there. So I know we're at the top of the hour, so we're going to have to close our show today for Tampa Home Talk, but our guests in studio are having so much fun, and we have a little extra time that we are going to continue this conversation. We're going to pick it up on Saturday at 5 o'clock. So you'll catch us here every Thursday and Saturday at 5 p.m. Lori, thank you so much for calling in today for our Credit Crunch tip. We'll be back here every Thursday and Saturday at 5. Don't forget Financial Peace University in our office next Saturday, the 26th. Join us, TampaHometalk.com. For this week, we're out.
WTAN, Clearwater, Tampa Bay. WDCF, Dade City, Tampa Bay. WZHR, Zephyr Hills, Tampa Bay. Listen.